In case you have just joined, because we are here every weekday from 6:30 and we kick it off with Good Morning Uganda, where we look at issues that affect you and also emphasize on ensuring that you're well versed with what is happening locally and internationally. Also some light moments there for you to spice up your morning with some light laughters and all that. So please make that it with us every weekday from 6:30. We are here. Then an extension, which is Good Morning Uganda Extra. Now here, I usually have guests or a guest in studio and we discuss issues of national concern. Now this morning, we are looking at mandatory local marine cargo and goods in transit insurance. Have you ever heard of this? Or do you have questions surrounding this? Well, be rest assured that the competent team I have with me this morning will do you justice as far as this is concerned. Now on set, I have Bukenya John, who is the Chief Underwriting Officer, Jubilee Allianz. Good morning and welcome.
Morning, sir. Thank you. Good morning, viewers. And we are happy to be here to tell you about the marine insurance. Compulsory marine, which started 1st November, but which will in the next 3 months, after 3 months, it will be compulsory for all people that will be importing goods to the country. Okay.
Well, and just next to him, I have Kakule Edwin from URA Customs. Yes, now when you hear that URA, Uganda Revenue Authority, I know most of Ugandans become attentive. What have they come to tell us this time? So you're most welcome.
Thank you, Mr. Charabo. Good morning, our viewers. And as URA, we're also here to give you of what is our role, issues concerning local marine insurance. Thank you and good morning once again.
And later on, I'll be joined by Stephen Kadu, who is the Manager Inspection Insurance Regulatory Authority. He will be joining me later on the show. Now, I want to begin with the man from the insurance, from Jubilee. Bukenya, first and foremost, to our viewer, when you talk about insurance, in a layman's language, what is this all about? What if I say, well, I need an insurance for this? Just briefly.
Insurance in general is a cover that future protects anyone, protects you as an insured person for any future losses, protects you for future losses. So when you take on insurance, like for instance for the marine insurance, people would take the insurance before the goods probably are imported. That means you're anticipating in the future, in case I get a loss. Supposing we're importing goods from China, and they're coming to Uganda, there are lots of hazards that could happen. There are lots of hazards that could happen, that the goods you could lose the goods, probably because when you take marine insurance covers goods on road, it covers the goods at sea, then it covers them even when they reach at the custom warehouse. So supposing you imported goods from China, and from China, sometimes China is a very big country, someone can import goods and the port is almost 400 kilometers away. So the insurance would start from the warehouse of the person who's selling you the goods up till to the port, then on loading. You see, the whole hazards during loading, probably when they are loading, the crane can have issues and probably the container falls down. So goods will get damaged. So there's cover from the warehouse, there's cover at the port, then cover at the seas, on the high seas. Because on the high seas, water could splash on the ship depending on the weather at sea, and that water could damage the goods. The ship can sink. You get it? There's been many cases where ship have collision collided and sunk. In fact, there were cases where we, some 3 years ago, from India, as one of the ships was moving from the port, the other was also docking, they collided and sunk. All the containers were lost. I'll tell you that during that time, we had clients, many clients, who had their goods on that ship. But one of our clients had insured they had 2 containers. So they had insured one of their containers with us. They had insured the other container from India. We paid them within 2 months, but they took almost over a year to get compensation from the Indian insurance company. So eventually I didn't know, because eventually the client stopped importing pharmaceuticals, but even when we stopped with them, they were still pursuing the Indian insurance company to pay them. So you see how this augurs well with what probably we are going to discuss with the team for having marine within the country. So now when you reach at Mombasa, in fact even before you reach Mombasa, you've heard of the pirates at the sea. It has happened where they come and ask for ransom, the Somalia coast. Then they ask for money. Let's say in the tune, sometimes it goes up as far as $10 million. So that, supposing the ship owners decide to save, probably the ship could have maybe goods maybe worth $50 million. And probably they have to pay a ransom of around 5 to save the big amount. So that $5 million, when it's paid, of course, it comes to insurers. It's not you, the insured, who will pay that, who the owner, the person who is bought the goods, but it will be the insurance to come in and contribute that amount. Like for instance.
So basically, this is to protect the goods in transit.
Transit.
But now we have a word: mandatory.
Mandatory.
Local. Marine. In just in a twinkle of an eye, can you elaborate more on that? Has it been there and it's not mandatory? Has it been optional that now it's going to be mandatory? Then you're talking about exporting, I mean about importing goods, and you have the word local.
Local. So mandatory, ideally, currently what has been happening is that importers have been free to get insurance in the country where they're importing from. They could either get it from local or they could get it from either China or India. But there was a law that was passed, which of course my colleagues from the regulator will expound further on the same. The law was passed and made it mandatory that any importer, anyone importing goods to the country must get insurance within the country. And if they don't, there is a penalty for that. A penalty which will be imposed if you don't have that marine insurance. There are penalties that you'll have to pay.
Now this brings me to URA. Now as far as implementation of this, where do you come in? What is your role? We usually see you in terms of getting tax, but here it's someone having shock absorbers in case uncertainty comes their way.
Yeah, thank you, Mr. Kirabo. Good morning once again. Kakuledwin is my name, from Customs URA, specifically under a section called Document Processing Center. Now the Document Processing Center is the section that actually verifies the documents that are declared to customs, that declare the goods that are coming in. The question is that what is our role in this now? As we determine the value of the goods, you have imported your container from China of tires, of whatever. Customs as URA and basically under the East African Customs, East African Community Customs Management Act, the value is determined with the Incoterm called CIF. Now CIF means cost, insurance, and freight. You go and buy your goods at a specific cost, that's FOB. You insure them as they are put on the ship or any other means that they are coming in. Then the cost of the freight. So a sum of cost and insurance and freight determines the value of the goods. That's why we call it the price actually paid or payable, a sum of that. But how do we come in? Yes, my colleague has told you that a law has been passed and now we are supposed to use local insurers. In the past, people have been getting insurance from their exporters, and they could give us maybe an insurance certificate under which you could add on and to get the actual freight that is done is involved in the cost of the goods. But the coming of local marine insurance on our side, of course you have to know, for us any policy that we're implementing must be by law. I've had asking the question mandatory now. For us, we come in to enforce that you're importing your goods. You must have secured insurance from where? Locally here in Uganda. And it saves us in a way. How? Of course, it goes without saying our interest is collection. That one goes without saying. It is going to be very advantageous on our side in that in the past, even people could not give importers or taxpayers could not give us the sum insured or the actual insurance that has been what? The cost of insurance that they have incurred to determine the CIF I've just been telling you. So this time round, with the local marine, and we know that actually we have secured insurance from here, it is much easier to determine what? The insurance, to be added on the cost and insurance to get the actual value of the goods. So ours is to enforce now. Please give us the cost you have incurred in insurance. If you have incurred it from here and with the collaboration with our colleagues here, it is much easier to do what? To get. By law, because you are going to ask me a question that, how have you been doing it? Even by law, we had to put a provision in the law that if somebody does not, if at all cannot ascertain the value of insurance, we could say that we could get a 1.5% of the what?
Of the goods.
Of the goods. But that way, either we may be cheating you, or we may be cheating what? Government. So this time round, actually, as URA and Customs, we welcome this policy. First of all, it will benefit our clients. My colleagues, I think, will expand on, because if I think I get enough for them, your goods are insured from the source, the country of origin, to the warehouse. And it also advantages to ourselves that now this time around we can easily determine the value of the goods and the sum insured to ease the derivation of the customs value, and also facilitate you easily so that we don't put any other inquiries. So sometimes when people come in and inquire, please give us an insurance certificate. That's if at all comes in scenarios where we even doubt the value of the what? The goods.